In the 1990s, Yahoo was a pioneer of the internet. It dominated search, email, and news, and was a household name. But as the tech world evolved, Yahoo made a series of missteps that would cost them billions. Today, we explore how Yahoo failed to acquire Google and Facebook, and how these missed opportunities contributed to their decline. Founded in 1994 by Jerry Yang and David Filo, Yahoo quickly became one of the most visited websites in the world. With innovative portals for email, news, and search, Yahoo was a symbol of the internet boom. By the early 2000s, the company was valued at tens of billions of dollars and was a dominant force in online advertising. Yet, despite its success, cracks in leadership and strategy were starting to show. Meanwhile, two Stanford students, Larry Page and Sergey Brin, were developing a new search engine called Google. In 1998, they approached Yahoo with an offer, a chance for Yahoo to acquire Google for just $1 million. Yahoo executives, however, dismissed the opportunity, believing their own search technology was sufficient. This decision would prove to be one of the most costly mistakes in tech history. Years later, Mark Zuckerberg launched Facebook from his Harvard dorm room in 2004. Yahoo was again offered the chance to acquire this social media platform. The company, still cautious and struggling with internal bureaucracy, declined. While Facebook grew into a social media empire, Yahoo stagnated. These decisions highlight a pattern of hesitation and misjudgment at the executive level. Yahoo's downfall was not just missed acquisitions. Leadership changes were frequent, with multiple CEOs in less than a decade. Strategic focus shifted repeatedly between search, media, and acquisitions, creating confusion both internally and in the market. Employees often felt demoralized, and innovation slowed. By failing to create a consistent vision, Yahoo allowed competitors to leapfrog them in critical markets. The financial impact of these missed opportunities was enormous. Google went on to dominate search and advertising, generating billions in revenue annually. Facebook became the centerpiece of social media advertising, reshaping how companies reach audiences. Yahoo, meanwhile, struggled to maintain relevance, its stock price declined, and billions in potential revenue were lost. Yahoo also lagged in technological innovation. Its search engine became outdated, email services were less reliable than competitors, and mobile strategies were slow to develop. Meanwhile, Google's algorithms improved user experience, and Facebook's social graph created unprecedented engagement. Yahoo's failure to invest in technology compounded its strategic mistakes, pushing it further behind in the digital economy. In 2008, Microsoft attempted to acquire Yahoo for $44.6 billion, but Yahoo rejected the offer. Analysts criticized the decision, claiming it was an overvaluation by a company already in decline. Later, Yahoo pursued acquisitions of smaller companies like Tumblr, but these moves did little to reverse the trajectory. Mismanagement, poor timing, and a lack of foresight had already set the company on a path toward decline. In 2017, Yahoo was finally sold to Verizon for $4.48 billion, a fraction of its former value. The acquisition merged Yahoo with AOL under Verizon's media division, but the company's glory days were long gone. Yahoo's decline serves as a cautionary tale about complacency, hesitation, and the importance of vision in the tech industry. What was once a giant had become a cautionary example of lost opportunities. The story of Yahoo teaches several key lessons. First, innovation requires decisiveness. Delaying or dismissing emerging technology can be catastrophic. Second, leadership stability is crucial. Frequent changes can stall innovation and create confusion. Third, corporate culture matters. Yahoo's internal bureaucracy stifled creativity and risk-taking, allowing competitors to capitalize on opportunities. These lessons remain relevant for startups and corporations alike. Yahoo may have missed Google and Facebook, but their story is a vital lesson in business strategy, innovation, and the cost of indecision. To learn more about billion-dollar mistakes and corporate scandals, subscribe to $1 Million Scandals and never miss a lesson from history's most costly business blunders.